Let's get into the look back and look forward GDP conversations with Bismarck Rwani, who is the Chief Executive Officer at Financial Derivatives. Mr. Rwani, good morning. Thanks for coming on the program.
Good morning, Bosun.
Okay, let's start with what we have on our hands. The purchasing managers' numbers just came out from FBN Quest, and it shows that things are moving slightly better.
Yes, marginal increase to 50 from 49, but it had gone all the way up to about 56 in November. Moving in the right direction slowly confirms that we might be at a point of inflection as far as inventory is concerned. And also, it also shows that we might just be turning the corner in terms of GDP growth at the end of Q1.
This is a look forward, but we'll come back to this in a short while. But let's look back to the numbers, a raft of data that we had yesterday from the Statistics Office. I'm not sure you are surprised by those numbers, were you?
No, I wasn't. But what was important was that we now have all the sectors contracting at a slower pace. Most important, oil. Oil went from -22 to -12, which means there was a 10% expansion in oil and gas production, which was critical. It not only means that we are getting more oil, we're getting more oil revenue, but also it supports the currency and it also supports the reserves. That's good news. And on the other hand, agriculture, which is not exchange rate sensitive, grew by about essentially by about 4.4%, which is good. The other sectors that are exchange rate sensitive, which is manufacturing, trading, also suffered because the foreign exchange policy, even though the process has changed, has not begun to have the impact yet on the tradables. It's only having an impact on invisibles.
Well, put the entire 2016 into some context for us, Mr. Rwani, as far as this GDP number is concerned, whether it's called the real GDP, what it's called the nominal GDP, how we finished off in terms of a GMP, for example, per capita for 2016.
Now, what has happened is that we've had 4 consecutive quarters of negative growth. However, the negative growth declined in the fourth quarter. So the peak of it was -2.26 in the third quarter, and the lowest point was -0.3 in the first quarter. So what we have in the last quarter is -1.31, and bringing the total year average to -1.51. What it means that in 2016, Nigeria grew negatively. However, the negative nature and pace started improving in the fourth quarter. All things being equal, in the first quarter, end of the first quarter of 2017, we will get to the bottom, and it will be called a point of inflection. And the indicators look positive. Reserves, gross reserves, 90-day moving gross reserves are up at about $29 billion. Inflation is tapering at about 18.7, could come down marginally to 18.6. We are seeing oil production up to about 1.8 million barrels. We are seeing price of oil 100% higher than what it was in 2016 at about $56 a barrel. We've seen cocoa come down a little bit, but all pointers show that we are in a better place than we were at this time last year.
I'm sorry to cut in.
February last year was the beginning of the decay curve, and February this year is the beginning of the recovery curve.
Yes, that looks like a 52-week conversation. But again, what exactly did you think the government at the federal level as a whole did in 2016 that sort of taper off the negative landing in the GDP?
No, the early part of 2016, there was a delay in the budget. There were arguments and squabbles about padding. There was exchange rate misalignment. We did forwards in sort of spot transactions. We had the foreign exchange market was not transparent. But as we moved towards the end of 2016 and into 2017, it became clear that some of those policies were failed policies. And so we began to see a better alignment of monetary and fiscal policy. We saw the economic recovery and growth plan being prepared. We saw the Eurobond issue, and now it's being settled. We have a tap-in of another $500 million. We engaged with the multilaterals. And I think all things being said, yes, in terms of magnitude, we are not where we should be, but in terms of direction, we are pointed in the right direction.
A number of consensus are saying 2017 will be a year to exit recovery, But if you check the social media and the word on the street, folks are already saying, look, we're going to get out of recession, but then how sustainable will it be? So moving into 2017, what would you want to see the Buhari's administration do very quickly to not just get out of recession, but consolidate it?
Let me tell you, you are out of a recession once you get into positive growth. We will be in positive growth by the end of the first quarter. But the growth that will require to employ resources, to get a stimulus, to get the economy humming again, you need more than the 1.5 to 2% growth which you are going to get in 2017. The real recovery, when there will be an increase in aggregate consumption, capital expenditure, and investment flows into Nigeria, will happen in 2018. It's going to be very strong and sustainable. So the U curve is in 2017. The V curve is in 2018.
In terms of how the government should move forward, there's the National Economic Recovery Plan, which hasn't come on board. We're working technically with the framework, which is MTEF, as it were. Do you think we still need this economic recovery plan? Should it just be an economic recovery plan, or should it be a national development plan? And how soon do you think this should get on the street?
Actually, it's economic recovery and growth plan. The recovery has taken place already because you'll be in positive growth area by the end of the first quarter. The sustainable accelerated growth plan, which is what the Minister of Budget and Planning is talking about, is how to get to an average around 7% between now and 2020. Because at that point, you begin to create enough jobs to have inclusive growth. You would have enough social intervention to make Nigeria's narrative be more competitive than protective. So all of these things will happen as long as the Central Bank of Nigeria can begin to move towards an accommodative monetary policy stance, one. Two, begin to have a much more transparent managed floating exchange rate. And three, to actually begin to monitor M1 money supply growth so that it doesn't fuel another round of high inflation.
A final question for you, Mr. Rwani. Look at the last 1 month, 2 months for us, and look at what's been happening at the government level, at the federal level, and what have you, the absence of the president of medical leave, whatever, who is acting, and what have you. Are you, if you put that together from a governance point, and you want to use it as an investment analyst, someone who manage funds and give investment advice and what have you, how do you think the space really is where we speak? Is it comfortable enough for you to say the next 10 months of 2017 will be a good time for me if I'm doing business, if I'm investing in Nigeria?
Yes. As far as we're concerned, the reform policy is aligned. The timing was different. We are now beginning to see a greater pace and momentum. There's alignment of goals. There's consensus of opinion. And I think that Nigeria, just because oil price is 100% higher than what it was at this time last year, just because the foreign exchange market, as far as the invisibles are concerned, is becoming much more transparent, it means that we need to deal with tradables, and we need to sustain this policy and not revert or fall back into what we call ideological backsliding. The future looks good, but there's work to be done. I don't want anybody to be deceived or Nigerians to believe that because of 7 days of spot transactions that the economy has turned around. There's still a lot of work. There's heavy lifting to be done by all parties.
One of the stories, one of the things that circulated in the news seemed to be tapering a little bit, disappearing, was that they called for a cabinet reshuffle. Do you still believe that should be done? If yes, when?
No, what's the objective of that? The point is that governance, as long as there's momentum, as long as there's coordination, as long as things are moving in the right direction, all you have to do is accelerate it. I don't think it's a people problem. It was more of a process problem. It was more of leadership momentum, which is now focused. And I think that all of these things put together, we are in the right place, and there's no need to change things if things are working.
You think the leadership question has been answered for Nigeria?
I think that the leadership question it's not a leader, it's just a question of ideology and momentum. The ideology is aligned. The momentum was different because the older school believed that things have to be done more slowly and more methodically, while the new school believed to do things more radically and more revolutionarily. But in the end, the objectives are the same. We must get results, the economy must start growing again, and the markets must be efficient.
But isn't that the natural way humans behave? The younger people seem to be running at breakneck speed, while those of you, and perhaps I may just add myself to your list, we're not in the same age bracket, I know. You're way ahead of me, but then seem to do things a little bit more slowly.
Yes, slowly, steady, well, wins the race. But you need some speed, you need the momentum. So I think combining both together will achieve the result. What we were having before was that there was nothing happening and people were getting bored and getting very restless. Now things seem to be happening and everybody's a bit happier, not at the happiest moment, but happier than where we were a month ago.
Yes, yes. When you say about happier, I can testify to that. You get into the newsroom and folks, my colleagues seem to be smiling more because the exchange rate looks like it's getting tamed. I don't know.
Not yet to Huru.
I don't know if that happens in your office. It looks like everybody these days say, "Oh, thank God!" It looks like the dollar is coming down. Thank God a little bit. I get to hear that in the last couple of days, so I get to rest a little bit more from those who comes every morning and say, "Hey, where are we going with the naira dollar?" So, what do you think? You said the elephant is still, the bull is still in the China shop.
No, I think that we are moving in the right direction. I think that there's work to be done. I think that we need to move 305 more to 340. And then the other one will come down from 450, 460 to around 420. Then we'll be in a sweet spot.
That's a devaluation. That's a devaluation. That's a devaluation. You're speaking devaluation, Mr. Rwani.
I'm saying that aligning the currency with reality. The currency is misaligned. I don't want to use the word devaluation because that is misinterpreted in many factors. That debate we had last year, February 11, Wednesday last year, was what led to the problems we had today. That contrived theatrical debate which we had last year. But now, things are clearer and we are moving in the right direction. So let's capitalize on the gains and make sure that we win. It's all about winning.
Mr. Rwani, thank you very much. It's nice chatting with us this morning, chatting with you. Thanks for bringing your insights and perspectives and experience and knowledge of the markets and the economy into this conversation. Thank you very much. Looking back and looking forward GDP. We appreciate that. Chief Executive Officer and Economist at Financial Derivatives Company.